Hello and welcome to this seminar on the new off-payroll rules. I'm Chris James, talking today on behalf of the FCSA. The seminar is for in-house recruitment, so thanks very much to Natasha for arranging this today. So today we're going to go over various issues around the off-payroll rules. I'm going to go through a reminder of IR35 itself in brief and how contractors pay tax. Then move on to some practical examples of IR35 myths about status. Then we'll go into what the new off-payroll rules are, the principles of the new rules coming into the private sector in April 2021, how the transfer of liability provisions work, then onto a kind of checklist of off-payroll compliance, so how to work with the new rules, the importance of knowing your supply chain, even more so once these new rules are in, the commercial risks for you, your supply chains of blanket banning PSCs, which is something that some end users have taken at least as an initial stance in response to these new regulations. What our experience in the public sector tells us and how FCSA can help. FCSA, who I'm talking on behalf of today, is the Freelancer and Contractor Services Association, which is a trade body which accredits businesses who supply to the recruitment sector. So it's a group of businesses that includes things like umbrella companies for payrolling people, accountants who specialise in contractor accounts and taxation, and so on. And it aims to promote best practice in that sector. So making sure that where tax is due, tax is paid, and that contractors and the supply chain is all looked after properly. First of all, though, it's sensible for me to just remind you, this subject, IR35, employment status and off-payroll, is very, very complicated. This webinar is a high-level overview only. It's supposed to help you with coming up with strategies to help you work with the new legislation. And advice, though, must be taken that takes into account your individual circumstances. So in very much the same way as an employment status determination, the best thing for you to do and for your businesses to do is going to depend on your exact circumstances, the sectors you're in, the risks you face. So just like an employment status determination itself, those unique factors need taking into account before you decide what to do. So I'm sure you'll understand that we can't accept any liability for anything you do or don't do after watching this webinar, but I do hope it's a useful introduction to the rules if you haven't looked at them before, and gives you an idea of how you can work with this legislation going forward. A few points about me. I'm Chris James. I am the Director of Accounting Services at JSA Group, which is one of the longest standing FCSA members. I am a Chartered Accountant by trade and formerly an auditor as well. But then more recently, I've focused more on employment status because I had a lot of contractors in my client base. It became something I got expert in. In JSA's work with the FCSA meant that I got the opportunity to join the board in 2017, and I was elected chair in 2018. And that's important, not just because it's nice to do a role like that with a body like the FCSA, but because the FCSA is a significantly sized body in our sector, we work quite closely with HMRC in terms of giving them feedback on what we think of tax rules and new initiatives. And so I meet regularly with the people at HMRC who have written the off-payroll rules and the guidance and try and help them with their messaging. And so I've got a good idea of what they're trying to achieve with this legislation. Some people would argue that they're not necessarily going to achieve what they want to, but to whatever degree they are, I understand where they're coming from and I know what they're trying to do. So it should give me quite a good insight into how these rules are intended to work. So let's get some broad terms clear in our heads as we then talk through the rest of the content today. Here is a simple supply chain with a PSC in it. A PSC is a personal service company, and that's where the contractor has established a company through which to supply their work. So you can see here on this supply chain, we've got an end user at the top. They're sourcing work, whether it's project work or temporary labour or whatever it is, through an agency. And that agency, in this case, is engaging with a worker, Dave, through Dave's personal service company, Dave Limited. So technically speaking, Dave is doing work for the PSC, Dave Limited, which is supplying that work onwards to the agency, who's supplying that work onwards to the end user. Then the end user is paying the agency, who is then obviously retaining a margin and paying the PSC. And then if we're outside IR35, and more about that later, then the PSC, Dave Limited, is able to pay Dave in a tax efficient mix of a low salary and dividends probably. Also, he'll be able to take expenses and stuff if expenses are properly due, but that's broadly how this will be working. Now, if we weren't outside IR35, if Dave needed to be paid as an employee, then he could use this supply chain. So this supply chain looks very similar. We've got an end user at the top again and an agency that's sourcing work, but now we've got an umbrella business instead of Dave Limited, and that's paying Dave. That would be paying Dave through payroll. So he would be paying PAYE and employees' national insurance on the payments made. So very similar supply chain, but obviously the net result for Dave is going to be rather different. So in summary, an end user requires work to be done. They're sourcing through an agency because the agency is good at finding the right kind of resource. The agency will arrange payment of the worker after deducting their profit margin of cost. They may pay the PSC direct, so example 1 in what we saw, the PSC will then pay the worker. Or they may pay the worker as an employee of the agency themselves. So the agency might run its own large payroll and pay workers in those circumstances. Or the agency, as many do, might decide that they're not in business to run large payrolls, they'd rather outsource that responsibility to someone else. So they might outsource it to an umbrella company. And again, PAYE would be applied. There are other versions of things like umbrella, so PEO, that's Professional Employment Organisation, or joint employment, or other versions. Broadly speaking, though, what we're looking at is a choice between a worker who's able to use a PSC and is probably outside IR35, working through their own limited company, Dave Limited. Or if we're not able to do that, we're looking at some sort of employment model. So whether it's agency payroll or umbrella payroll or something similar to that, like PEO. So how is the tax being paid by Dave and Dave Limited? Well, Dave and Dave Limited working outside IR35 will be in the column on the left here. So the rate will be paid to the limited company, Dave Limited. Dave Limited will pay corporation tax on its profits, and Dave would pay dividend tax on amounts of dividends paid to him over a certain threshold. Then the remainder of that will be then take-home pay. If you were to take the same gross pay and put that through payroll, then Dave would suffer PAYE and employees' national insurance, and his take-home pay would drop a little, as you can see in column 2. But if someone's going to pay Dave that way, they're also going to have to pay employers' national insurance, which we see in column 3. So the actual cost of the supply chain of Dave receiving that take-home pay that's a little less than his outside IR35 PSC take-home pay is a bit more than the original rate. And what we see in some supply chains, if a worker has to go from working outside IR35 through a PSC to working on a fully employed method, sometimes the supply chain doesn't find any extra money. And that's what we see in column 4, where the employer's NIC cost has been pushed down into the rate that's allocated to the contractor. So in this situation, the contractor would need to agree to work on a lower rate, which goes then, as we see in column 4, you get even less take-home pay. And that's important because you've got to understand as an end user what the impact is on your contractors of not increasing the rate that you allocate to for those workers. But also you need to bear in mind that this is the reason why quite a few umbrella companies that don't do taxes properly end up getting set up around the times when these rules change. We saw it in the public sector in 2017. We're seeing it again now as April 2021 approaches. Anyone that's able to offer workers better take-home pay than what the law allows is obviously going to be very attractive in a situation like this, where you might find yourself pushed from column 1 to column 4 as a contractor. So we've said that we can work outside IR35 if we are outside IR35, and if we're not, we might have to work on an employed basis. So what is IR35? Well, what we used to know as old IR35, the one that's been around for around 20 years, it's called IR35 because it's named after the Inland Revenue, IR, press release or notice number 35, IR35, that's where the name comes from. What that notice said, though, was if someone is acting in the same way as an employee, but they're working through an intermediary, then that shouldn't mean that they don't pay the kind of tax that an employee normally would. So in our example, Dave and Dave Limited, it's saying if Dave is working like an employee of the end user, then he should be paying employment taxes like he would be if he was an employee of the end user. The way the calculation was defined was that it said that the amounts paid to Dave Limited, we should take those, knock off 5%, and say that the rest, the 95%, is employers' national insurance and gross pay. So perhaps 86, 87% gross pay with employers' national insurance on top, totaling 95% of the invoice value. That should be payrolled by Dave Limited, and Dave Limited will pay the taxes that are due over to HMRC. So that sounds relatively simple. If you look like an employee, then you get taxed broadly like an employee. But deciding if you're an employee or not, that's not actually that simple. So what do we consider here? Well, back to our supply chain, we have Dave and Dave Limited there. We can simplify that even further by saying that Dave effectively is doing work for the eventual benefit of the end user, and the end user is making payment, a good part of which hopefully will reach Dave one way or another. So for IR35, the question we ask is, if we ignore the legal form of all the agreements that will exist between all those parties in the chain, ignoring that, is Dave working as if he was an employee of the end user? Is that the manner of the work that's going on? And if that is true, we say that he's caught, or this piece of work is caught or inside IR35. Technically, what we're going to do, we're going to ignore the actual contracts in place, at least initially, and then look at a contract between the end user and Dave. We have to imagine it because it doesn't exist. So we imagine that contract. We base that imagined contract on the actual contracts in place and the actual working practices. And then we say, is that imagined contract a contract of service and therefore an employment one, or more like a contract for services, a business-to-business relationship? And importantly, where the working practices and the contractual terms that were in the original contracts, not the imagined one, but the ones that are actually in place, the working practices and the contracts are different, then we'll rely on the working practices, because we're trying to decide here on the reality of the situation, not just what's written in the contracts. So if what's in the contracts isn't represented in real life, the contracts will be ignored. So that again sounds simple, but what, again, so you look at contracts and decide if it's employment or not. How do you do that? What you have to do is look back at over 50 years of case law, and you look for features in that imagined contract, and then you compare those features to what's been found in past court cases and tribunal cases about status. So what are the things that have been relied on in court? Do they apply in our situation? So we look for these features. And they are as follows: mutuality of obligation. So this is where we're looking at, are Dave and the end user obligated towards one another? So for example, is the end user obliged to continue to find work for Dave, and is Dave obliged to continue to turn up and do that work? If there isn't that mutual obligation, then that suggests non-employment. So that means it's not looking like a normal employer-employee relationship. Control is also considered, and this is controlling how work is done. If the end user is applying strong levels of control to how Dave gets his work done, so for example, defining very closely what's involved in his day, not letting him work on his own hours or in his own space, if that's possible, given the nature of the work being done. If there is a strong level of control over how Dave gets his work done, then that suggests an employment relationship. So that suggests inside IR35. And the third of what's known as the silver bullet is a right to substitute. And this should be an unfettered right. So what this means is the PSC, Dave Limited, should have the right to supply someone else instead of Dave if it so chooses. Now, in some sectors and in some types of work, that's not going to be possible. And that doesn't mean that all of those kinds of work are inside IR35. It just means that substitution isn't going to be a test that pushes you outside. So what should be the case here is that Dave Limited is allowed to substitute Dave, and that's what you're looking for the substitution right. Unfettered just means that the end user mustn't be able to put unreasonable conditions around that substitution. And the other factors that we consider are financial risk, for example. So if Dave does the work wrong, does Dave have to put the work right without being paid again? Or does Dave just get paid until the work's finished, however badly he does it? And we ask the overall question, is Dave in business on his own account? Is Dave Limited really a business? Or is Dave Limited a convenience to try to reduce Dave's tax take? And so we consider all these factors together and we take a decision on a group basis. So status is never decided just purely on one point. It should be considered on all the points involved, although it's very commonly the case in certain status cases that one or two factors will be much more important than anything else. But we do always consider the whole position, which is why, of course, if you're trying to make a decision quickly or with limited information, it's very difficult to do that professionally. So having considered those, that's the kind of the legal background to how we decide on status. What about the real world? What are the common questions that we get from contractors and recruiters and end users alike? Well, the first one that's very common is, are all long engagements caught by IR35? So if you're in place for a long time, are you automatically inside IR35? The answer to that is no. But what is true is that in general terms, the longer a contractor is working with one end client, the more likely it is that the way they work is going to end up in a situation that looks more like that of employment. So you start to look more like an employee the longer you're working with an end user. So by being careful and rigorous in your working practices and so on, it is possible for that not to happen, but the risk increases the longer an engagement is. But there's no time limit that means you're inside. You're not inside after a year or 2 or 3. Some contractors are often very proud that they've got more than one client because they think that means that they're definitely outside IR35. That's not true. However, the kind of contractor who has multiple clients or rapidly moves from one client to another is more likely to be working in a manner that's not one of employment, and so is more likely to be outside IR35. So like a lot of these myths, there's an element of truth in them from certain points of view. What about if my contractors are not an employee? Does that mean I'm outside? Well, hopefully from what you've already heard, you'll know that that's not the case. If your working practices are those that look very much like an employee, then just having a line in your contract that says, I'm not one, is not enough by itself to mean you're outside IR35. So the working practices will override the contract if they do not agree. A lot of people seek to rely on the fact that the agency substitutes workers quite regularly, and they feel that therefore does that suggest they've got a substitution right, and therefore they might be more likely to be outside. That's the wrong party to be substituting. Agencies exist to a degree to substitute people. They're one of the things they're best at is finding people to get work done. It's not the agency, it's Dave Limited and Dave that need to be able to substitute Dave if that's appropriate. Often we hear that contractors will say, it's my agency's problem or it's my end user's problem. They let me work this way. And of course, that's not true in the old IR35. And in the private sector now, that's still not true. If a contractor treats themselves wrongly for status purposes, then in absolutely the vast majority of situations, that's entirely down to them. That's their problem, and it's them that's going to have to pay the tax. But the reason it's an important question at the moment is, of course, once the rules have changed, so in the private sector from April 2021 onwards, unless you are small, then, and more about that later, then it could well be the agency's problem. But today, in the private sector, it's not. Another question I get asked a lot is, can I be an office holder and be outside IR35? If you're holding an office like financial director in a business, then you're not going to get an outside IR35 status from HMRC. Office holding is an absolute no-no from that point of view, because you're occupying a permanent office of the business, and that's seen as you can't be outside the business, you must be part of it. And finally, could I get a contractor in for maternity cover? Could they be outside IR35? And there's kind of two answers to this. If you're a contractor and you're going to go in and cover the responsibilities of someone who was an employee for 9 months, for example, then you've got to think about what you're doing there. What the work you're doing is to occupy the role of an employee. Therefore, surely you are inside IR35. At the same time, though, sometimes people will say, well, I've got someone who's on maternity leave for a while, and one of the things they won't be able to do is deliver this project for me. Maybe a contractor could do that project, and maybe that project will be outside IR35. But if the work that the contractor is doing is covering for someone who's on maternity leave, who is an employee, then surely they're inside IR35. So what does an employee look like? Just to kind of draw a line under that section we've been talking about under employment status. Employees can be directed to do different things at will. So if you're an employee, you'll often have a main responsibility, but you might do other things if the business needs you to. Shouldn't be true for contractors. Employees are not just here for one discrete project, they're normally here for a range of things. Employees are likely to get benefits like gym or parking or to go on Christmas parties and things like that. Employees, of course, don't have to tender for work. That's not part of their remit. They have to book time off on the company system, in the holiday system. They're going to be subject to close performance management, so not just pure deliverables or purely KPIs. They're normally going to be judged on a whole range of things on a regular basis. And they're going to be closely controlled and managed. So that's what an employee looks like. If your contractors that you're hoping are outside look like this kind of a worker, then you're going to have to think twice about whether or not it's possible to get your people outside. Should point out though as well, of course, on any of these things, if you find that the contractors you're using at the moment, you were hoping maybe would be outside, but they don't look outside at the moment, but you might be able to change the working conditions genuinely by April, then that's perfectly possible. If you really can change the way these people work, maybe that they work the way they do because that's just been convenient in the past. Or it might be that if you are able to, you like to exercise a lot of control over contractors, but if that's going to harm their IR35 status and you know you'd like to let them be outside IR35 if that's genuinely possible, then you can change their working conditions. Obviously make sure contracts represent a new position, get some legal advice to help you with that. There's nothing wrong with changing the situation. What you don't want to do is look at the situation now and then just pretend it's something it isn't. So what's the problem with IR35? As I mentioned before, it's been around for 20 years. Why are HMRC messing around with it? Well, on the old IR35 rules, the contractor decides if they're inside. And it's them that pays more tax if they're inside. So immediately there's a bit of a problem there with you potentially how motivated you'll be to treat yourself properly. Contractors, when they look around, they don't see HMRC doing an enormous amount of enforcement. And when they do read about HMRC being in court, there tends to be quite a lot of coverage of cases where HMRC lose. There isn't a real risk for clients or agencies if the status of the contractors is wrong. So for end clients, if you've got a contractor working for you and they don't treat themselves properly, it's very hard for you to end up with a real problem. So HMRC wanted to ensure that the supply chain generally took more responsibility for what was going on lower down in it, both for end users and agencies. They've grown tired over the years of hearing that an end user or an agency can't be expected to know what happens at the bottom of their supply chain. And so they rebooted the IR35 rules into what's known as off-payroll or the new IR35. So what are these new rules? The responsibility for the decision on status moves to the end user rather than the contractor. So we look at a piece of work, a contract being offered, and the end user has to decide if the person I get in to do that, when that work is done, that will be an outside or an inside piece of work. The financial risk moves from the contractor to the fee payer, and that's whoever pays the PSC. That will typically be an agency in the kind of supply chain we've been talking about so far, and that liability could move to the end user as well. What the actual liability is being liable for an underpayment of tax or national insurance, including employers' national insurance, that should have been deducted from payments made gross to the PSC. So therefore, agencies and end clients are taking on a new financial risk, as liability can move back up the chain all the way to the end client in certain circumstances. If your workers are working through PAYE, the intention of the legislation is that that will be outside scope. So this shouldn't apply. So as long as, if you're insisting that your workers are inside, or you're insisting that you don't want to work with PSCs and you want everyone on an employed basis, then provided the umbrella partners or other partners that you're using are deducting full PAYE, then that should be outside the scope of the legislation. You shouldn't have a problem. And this legislation applies to private sector work, in the private sector, to work done from the 6th of April 2021, after a delay in 2020, as you'll be aware, I'm sure, and after it started in the public sector in 2017. Critically, though, it's worth reminding ourselves here, the employment status test is the same test it was before. So if you've got a contractor who genuinely had properly had their status assessed and was outside, then they should still be outside now under the new rules. The way you decide whether someone's inside or outside has not changed. But critically, of course, the person deciding has changed. And obviously the attitude to risk might be different then. So just to consolidate that, here's the supply chain that we're looking at. We have an end client on the left. In this supply chain, it's quite complicated. We've got 3 or 4 agencies. We've got agency 1, 2, 3, and someone else who's called a fee payer. Perhaps that's agency 4. But they've been identified here as the fee payer because they're the one paying the PSC. They're paying Dave Limited, and then Dave Limited is paying the worker. So in the legislation, whoever pays the PSC, they're known as the fee payer. So when I originally did this for In-House Recruiter, we looked at how prepared we were, and we found a real mix of preparedness, which is not surprising. Many people, especially after the delay in 2020, have been hesitant to prepare because they're wondering whether or not there'll be another delay. All I can say about that is that at the moment, the government's still confirming that they want to go ahead with this. Since they delayed the legislation last year, they've always said, we will be bringing it in the future. And so, yeah, I can understand why people are wondering whether there'll be a delay, but that's not really a plan. You can't plan by hoping there'll be another delay. So what was brought into the public sector in 2017? Well, for public sector end users, so like the NHS was one of the biggest public sector end users, of course, the rules were in place for payments made from the 6th of April onwards. The end user had to decide on the status of each assignment in the public sector, and overpaid, the contractor company will be liable. So that's the fee payer in the final version of the private sector rules. There's no 5% to knock off in the off-payroll rules, whereas there was for old IR35. So for contractors in the public sector, if the end user decided that you were caught and the contractor wanted to continue using their PSC, then the rate paid to the PSC will be taxed pretty much like PAYE or an umbrella payment. In that case, the contractor is being taxed like an employee, but is receiving no employment rights whatsoever. And the end user decides, but is effectively not liable. And this was for the public sector rules, because there was far less liability transfers throughout the supply chain, which I'll go over later, than there is in the final version of the rules that are coming in April 2021. Should point out as well, the rules that come into the private sector in April 2021 will then be pasted over the public sector as well. So liability transfer will be possible in the public sector under the new rules. So here's where we end up with, in that case, what we have at the start, at the top of this slide, is the assignment status is assessed by the end user. And if over to the left, the assessment is that that piece of work is inside, then we've got a couple of main options, which is we either offer that work as a permanent role, but of course, in most cases in these situations, we're looking at a temporary situation. So more commonly, we'll go to a recruitment business to find us some labour to carry out that work for us. And the recruitment business might pay the worker themselves, or they might use an umbrella or someone else to do the payrolling. The questions that we have over on the left is what rate of pay do we need to pay? So if we had a budget in mind for this work getting done, are we going to have to change that budget if we're going to offer it on an employed basis? Because it may be, as it says at the bottom, it's harder to find the right talent on an employed basis if we're not going to change the rate we're paying. If the assessment is done and we decide that this is an outside IR35 piece of work, then of course we can progress broadly as we did today. So the recruitment business will pay the PSC as before. The new financial risk, though, is to the agency and under the new rules, potentially to the end user, if that status assessment turns out to have been wrong and that the PSC shouldn't have been paid on an outside basis. So these are the impacts on the supply chain of these new rules. Now, the rules that were brought into the public sector and are then being amended by these new rules in the private sector were in part of the Income Taxes Act, ITPA, Chapter 10. Now, that doesn't matter to you very much, I don't imagine, but the point was the old rules, old IR35, is in Chapter 8. So the new rules were new. They're new law, and therefore what we didn't have was a whole load of case history for how the new rules operate. The key difference between Chapter 10 and Chapter 8 is that in Chapter 8, the PSC deals with all of the taxes that might be due. In Chapter 10, there is an implicit description of how rates might change, in that it says if this applies and if the PSC is going to be paid, then employers' national insurance should be added on top of the rate originally agreed. It shouldn't be taken out of the rate paid to the PSC. Now, of course, in some ways, this might be a moot point, because if you no longer pay a PSC, you should be coming with a new agreement with a worker to pay them through some kind of employed method and therefore agreeing a new rate. But if you don't, if you try and cut corners and just say this is the same engagement, we're just paying you a different way, then you could end up with a liability for increasing the rate to account for employers' national insurance. And that did happen a little bit in the public sector. Some tribunals were taken successfully by workers. It's very important, if you do move people from one engagement method to another, that it's very clear to everyone involved that there's a new contract and a new rate is agreed. As I say, rates didn't always go up, and here's what we saw happening for some parts of the public sector, especially at lower rates. So we started on the left with our worker outside IR35 suffering corporation tax and dividend tax. Sometimes that worker then ended up in column 4 over here. So take-home pay was massively reduced. And as I mentioned before, the big impact there is that obviously there's a huge impact on contractors, which needs to be understood by the whole supply chain. But also then it did lead to a lot of temptation for people to use non-compliant providers in some sectors. And yeah, that's something that everyone needs to be aware of in the supply chain so they can try and avoid it. So as we move into the final rules, the final iteration of these rules that's coming in from April 2021, what that says is for each new assignment and each extension of an assignment, and if anything changes about the assignment, as in any of the conditions that have been relied upon in order to work out what the status of the assignment was, then at that point, the end user, if they are not small, and more about that in a moment, must issue a status determination statement. And what that does is it confirms the status of the piece of work. And they must pass that to the next party in the chain, so normally the agency, and to the contractor, so Dave or Dave Limited. If they don't do that, but they allow a PSC to work in the chain, then they'll be liable for any underpayment of tax that might be proved later. So a good assessment is key, because if you've got a good assessment, you're not going to be paying people gross who shouldn't be paid gross. And so the SDS must be issued at the start of a new assignment, and also in April 2021, if an assignment is already in progress. So if we've got an assignment that's in progress now in January 2021 when I'm talking, and it moves over, goes through April, then in April an SDS must be prepared in order to avoid liability for the end user or the rest of the supply chain. I have been asked once or twice whether or not an SDS which was prepared last time round for the regulations before they were delayed, whether that can be used, and that from a technical point of view, yes, it can be used. But of course, it should only be used with care. You've got to make sure that the conditions that were in place at the time that you relied upon when coming to that status determination are still true. But in theory, there's nothing wrong with using an old determination statement if you believe it's still accurate. So what is in the status determination statement, the SDS? It confirms the status of the assignment. And of course, let's not forget that deciding on the status of the assignment is the responsibility of the end user, although they can get the supply chain to help, but the end user must be responsible for it, must sign it off. So it confirms the status and the reasons behind that decision. If the worker or the business paying the worker or the PSC of the worker, so Dave Limited, Dave, or the agency paying Dave Limited, wants to challenge it, they can, and they've got until the last payment is made for the assignment to do that. If they do, then the end user has to respond to that challenge within 45 days. If you challenge, you've got to explain why you are challenging, and if you reply to a challenge, you've got to give reasons for your response. If the challenge process is not followed, then the end user could end up liable again, because if you don't reply to a challenge, then you become the fee payer again, even though you're the end user. So you then become the place where HMRC will come to collect taxes. If, of course, HMRC are able to show that taxes are due. It's not automatically that if you paid anyone outside, HMRC can come after you. It's only if you paid them outside on an outside basis and should not have done so. A good SDS is very useful because it provides detailed reasons for the status decision, which will help contractors understand the issue. It might provide detail that the supply chain can work on and change, which might make the status different or more clear or more safe or whatever. It'll ensure that only truly outside IR35 workers are paid without payroll deductions, which protects all the parties in the supply chain because it reduces the chance of liability from HMRC. And contractors' assignments at the moment can be sampled now with a good status assessment tool to see what the likely impact will be on your supply chain. There's more detail about SDSs in the employment status manual, which is HMRC's internal guidance on how to apply these rules. If you Google ESM 10,000, so just ESM 10000, you'll get a contents list of all the guidance that HMRC have issued around how the off-payroll rules work. So it's a good source of information to see what HMRC are saying about the rules. Now, I mentioned that this applies unless you're a small end user. So to work out if you're a small end user, first of all, you've got to make sure that you know who the end user is. So who is the end user? Normally it's the business at the top of the supply chain that we looked at originally. But sometimes a business like the recruitment business might actually supply a whole supply of services. So in simple example of this would be, rather than supplying 5 contractors to do some project work for somebody, they might manage and control the entire project. So rather than supplying just 5 bodies for as long as it takes to get the work done, they might quote for the delivery of X, Y, Z. The recruitment business in that case would probably be quoting for one price for the whole project, the recruitment business will be deciding how many people are needed to staff it, and they'd be picking those people. The end user wouldn't get near that. In that case, it may be that you meet the conditions for that to be a whole supply of services. And in that case, the end user then becomes that recruitment business, the one supplying the whole services, rather than the original end user who you would have guessed from the supply chain. But that has to be very carefully confirmed. A lot of people will be trying to use this arrangement potentially to bypass the rules, or to give the impression they're bypassing the rules. So unless you've had it very, very carefully confirmed, then you should assume that the kind of the face value end user really is the end user. So usually it's going to be the business at the top of the chain, and therefore the size of the agency or other intermediaries is not relevant, because it's only the size of the end user that matters. Once you've identified the end user, they are small if, and now, and a quick apology before this slide, I didn't design these rules. I have had a go at HMRC at some point about how complicated these rules are, but this is what the rules are, so let me explain them to you. You're a small end user if the accounts that you filed in the tax year before the tax year we're looking at say that you are small. So for the first year of off-payroll, which is expected to be now from the 6th of April 2021 to the 5th of April 2022, what matters is the size your company was when it filed accounts in the previous tax year. So that's the tax year we're in now, 6th of April 2020 to the 5th of April 2021. The size limits of those laid down by the Companies Act, which is that the company can only breach one of these three conditions. That's an annual turnover of more than 10.2 million. Balance sheet assets, that means the total of the assets on the top half of the balance sheet, not the net assets, of over 5.1 million, and over 50 employees. So you can breach one of those and still be small. The helpful fact here is that the filed accounts should state their size. Do beware, because even accountants, very, very competent accountants, can get this wrong. But because you have to know what size a company is for the Companies Act to file the right accounts, normally the accounts will be the place to find the size of your end user. So if you are an end user, that's the first place to go. I suggest you check with your accountant if you're not sure what size you are now or what size you're going to be in some accounts that are filed quite soon. So that's how we decide if we're a small end user. So what if you're a small end user? Well, big implications as it happens. In the private sector, it means that you don't have to comply with the new IR35 rules at all. The only requirement is that you confirm to other people that you are small and therefore you're not applying the new rules if you are asked to do so. There's no requirement to assess contractor status, therefore, or issue SDSs as an end user. Contractors working for small end users will just apply the same IR35 rules they do today. So it's still on their head. They carry on as they were before. You are the size you are for a whole year. So as mentioned before, it depends what you file in the previous tax year. So that's good though, because it means you're not going to keep changing every month or two. So as your turnover changes, you don't have to keep a constant watch on that to watch out what size you are. You just have to know what you are for each tax year. Importantly, worth just noting, although it's not going to happen very commonly, if you issue an SDS because you weren't small and then you become small, then you're required to officially withdraw that SDS. And that's so that the contractor knows from then on that IR35 is on their head again. Now, another question I get regularly is, what about overseas supply chains? Well, what we have to look at there is which part of the supply chain are we talking about? So what matters is where the end user is and where the worker, Dave, is. What about the end user business first? So if the end user business is not UK based and there's no permanent presence in the UK, for example, a representative office, a branch, or an agent working permanently on their behalf, then the new rules don't apply. So if there's no UK presence and no kind of outpost in the UK, then new rules don't apply. And in that case, the end user doesn't need to do anything and the agency can operate as it does today for those assignments. The contractor just carries on using the same IR35 rules that apply today. But like I say, a UK business at the moment can't just set up an overseas office and build from there because they've still got a UK presence, so the rules would still apply. Now, where's the contractor? So in general terms, if Dave in our supply chain is not a UK resident for tax, then the new rules don't apply, and even more than that, even the old IR35 rules don't apply. Because IR35 exists to make sure that Dave isn't paying less tax than he should. And if he's not a UK tax resident, then there's no UK tax to worry about on that score. So if Dave is genuinely not UK resident for tax purposes, then he shouldn't be in the scope of these rules. Don't forget though that this isn't something that Dave can just claim. It's a matter of fact or not. The HMRC have rules about what makes you state resident or not. That's what needs to be confirmed. Dave just can't decide he's not resident. Also, of course, for end users or agencies, if you're going to pay someone who is overseas, there may be extra checks you need to take about making sure that you're not doing anything that's increasing your risk of not complying with money laundering regulations or anything else. So overseas workers generally are something that's worth considering very carefully. Now, if you found that your piece of work is inside, but you want to pay a PSC, how can you do that? Well, you can do that. It's in the rules, but it's not very easy. If the assignment's viewed as inside, the PSC can be paid as follows. So the fee payer, whoever's paying them, it could be the end user if there's no agency or anything else in the chain. If there's just an end user and a PSC, it'd be the end user that does this. Otherwise, it'd be the agency who's acting as the fee payer. So they set up the worker, Dave, as like a special kind of pseudo employee. And then they apply payroll calculations to him broadly as normal. Dave Limited, in our example, would receive the net pay. So he invoices for a certain amount and then receives less than that. But then that smaller amount that the PSC receives can be paid on to Dave with no further deductions because it's already submitted to payroll taxes. Dave, our worker, has no employment rights, doesn't get pension, doesn't get sick pay, doesn't even have the right to a payslip, which is one of the basic rights in law. If you are an employee, you have a right to a payslip showing how your tax has been applied. Dave Limited, in this case, doesn't have a right even to a payslip. So for this reason, most workers in that situation would rather take a genuinely employed option, direct payroll, umbrella, or something similar. They'd rather have that because at least then, although they're paying the payroll taxes, they have employee rights. So yeah, we're back to this situation again where we've got a good assessment at the top, and that's going to drive us either to an inside employed role or an outside, broadly working as we are today. Now, the important point here is then, can you work within these rules and protect yourself from liability in the new world? Can the supply chain protect itself? The end user passes liability on if it does the assessment using reasonable care, so takes it seriously and makes sure a proper job is done in reaching an assessment, which it may do in-house or it may outsource, and it passes that on via an SDS to the right parties in the chain. The agency passes liability on to others if there are other links in the chain, and it receives the SDS and passes that on. If payroll type deductions of tax were not made and HMRC can show later that they have been, then they'll go to the fee payer first. So normally that'll be the agency that paid the PSC. If they can't collect there, then they can go to the top agency in the chain, if there's more than one agency. And if they can't collect there, they can go to the end user and collect from them. But only, well, then the law's written very broadly. So what can we say about that? In this example here, we've got an end client on the left. They do an assessment and they pass that on to agency 1. Agency 1 pass it on to agency 2. Agency 2 pass it on to agency 3, but agency 3 doesn't pass it to the fee payer, who potentially is agency 4. And the rule here would be, HMRC would look at this supply chain and say, right, should the fee payer have deducted taxes? The fee payer would then show that it hadn't received a decision from agency 3. Of course, this is difficult in law. How the fee payer proves it didn't receive an SDS is questionable, but let's ignore that for now. But here, the liability was with agency 3 because it didn't comply with the rules. If the revenue couldn't collect from agency 3, then they would go to agency 1. And if they couldn't collect from agency 1, they could go to the end client. So this happened, as I say, if you can't collect from low down the chain, then HMRC could potentially move up the chain. But what they've said is they won't do this if there is a genuine business failure. So if, for example, agency 1 no longer existed because its market had dried up and it had ceased to exist, then they wouldn't necessarily go up to the end user. But the law is drafted very broadly to allow them to move to different parts of the chain. And it's only in guidance that they've said that they won't use this right very often. So, we're having to take it on trust from HMRC that they won't use these debt transfer provisions as widely as the law allows them to. They've put them in because they want end users and agencies to take responsibility for the whole supply chain, and that's understandable. But it'll be years before we see how broadly they do apply this. The end user assessment, as I mentioned, must be done using reasonable care. And again, back to the ESM, ESM 10014 has got some helpful extra content there for you. So how do you try to protect yourself from liability? You're liable if you don't issue an SDS, and you should have, and you don't pass it to the right people. So you make sure you do that. You're liable if you can't show you've passed on an SDS if you're an element of the chain. So if you are an agency, you've got to make sure you can show you've received it and passed it on, or that you didn't receive it and you made some effort to get hold of one. You're liable if you don't respond to an appeal or a dispute within the 45 days. And you're liable if you don't answer the "Are you small?" question and you were small, or by issuing an SDS because you were not small. So they're all ways that you've got to be careful that you don't end up liable by mistake by not complying with the rules. Given all of the above, of course, it might be tempting to just say, right, well, I'm just not going to have PSCs in my supply chain anymore because there's so many potential pitfalls of doing so. But there's a huge commercial risk. You use contractors because you need them. HMRC themselves accept that most PSC contractors are outside IR35, not inside. Recent seminars I've been on and that HMRC have been running elsewhere have shown that most PSC contractors don't want to accept employed roles. They want to be self-employed. It's a lifestyle choice for them. So it's clearly possible to use self-employed contractors through PSCs in lots of situations, just not all of them. So the key is not to manipulate an inside assignment with fictional contractual terms. So only pay people outside who genuinely are outside. So the answer here is, or the point of this is that there are a lot of people who are outside, especially in certain sectors. There are certain sectors where there's a lot of inside people. Banking is probably one of those because we've already seen a lot of impact on the banking sector. But there are lots of sectors where there are lots of outside people. So critically here, of course, a good assessment is key. You need a good assessment so you can identify those people that are outside and you can continue to work with them in the way they want to work. So if a good assessment is key, how do you get one done? Well, for an end user, you could employ some employment status experts, but that's only really going to be an option for the very biggest end users. You could use CEST, which is HMRC's assessment tool. CEST is controversial. Some people think it doesn't work very well, but its main advantage, of course, is that it is issued by HMRC. And so if you're trying to show that you've tried your best in order to evidence that to HMRC later, then CEST is probably a reasonable place to start, at least. You could get an opinion from a firm of experts on your contractual terms and your working practices, but don't forget you're still going to have to issue SDSs for each PSC assignment that you work on. You could get access to other tools. There are various online tools available, and there's various other ways to get expert intervention at the points where you need it. You probably should, as an end user, because you're considering working with this new legislation, you've got new risks, so it's important to consider insurance, consider the insurance you've already got, and consider whether or not there is any extra that you need. But do be very careful around that. It's very easy to think that with a bit of insurance and there's no problem here. This legislation is all about putting in new processes and procedures, not just insuring away the problem. And do, of course, involve the whole supply chain, because however that you as an end user want to do assessments, you're going to need to make sure that your agencies can work with that, or that your PSCs and contractors are going to be happy with the way you're approaching this. So do involve the whole supply chain and keep communicating. So in my opinion, for an assessment solution to be useful from April 21 onwards, it's got to have a known and acceptable cost. So if you're going to buy them piecemeal, you need to know how much they cost. If you are going to buy them piecemeal, if you're going to outsource the opinion, the status decision process, it's got to be able to operate quickly at high volumes, because especially around March and April, you're going to have a huge volume of status determinations to make. You've got to be able to fit the assessment solution that you use into your existing procedures, and you've got to ensure it's documented and not overridden. So it's very important it's documented, because later HMRC will be looking to collect liabilities, and your way to defend against that will be to show that you followed procedures properly. So it's got to be documented, and it's got to be not overridden, because there's no point you putting in a brilliant process that then can be overridden by an overexcited consultant or director or someone else with some responsibility. And it's got to be accepted by the whole chain, because as I mentioned before, if the whole chain can't work with whatever the solution is that you want to use, then you're going to have trouble making sure everyone is complying. Then we had another poll the first time I did this seminar for in-house recruitment, And the answer that we got back, and I said, how do you think your workers are going to work? They're going to work inside or outside? It was, again, a very mixed bag. And some people just didn't know the answer yet. So again, one of the first things you need to do if you haven't moved very far on this at all as an end user is work out who your contractors are and get a sample of those assessed. So you can work out whether or not you think you've got a lot of outside people, a lot of inside people, or a mix. And that will inform your next steps. So what's the project plan if you haven't started? Or of course, if you have started, you can pick this plan up as the stage you've got to. You should lead from the top and establish a project team, or at least a project lead for off-payroll. The reason for this is that when HMRC have explained what they expect businesses to do, they want to see you taking this seriously. So having a project team who's responsible for working on it, or having a lead whose role it is to make sure that it works properly, is a critical part of that. Identify the contractors that you've got and sample assess some of those. Excuse me. So as I mentioned before, you've got to work out where your contractors are and assess some of them to see what their status is. Look at whether or not there are any working practice changes or contract changes that you need to make as a result of the sample assessments. Establish then how you're going to do assessments on an ongoing basis. So you're doing sampling at the moment, but what are you going to do as you move forward? What's the business as usual solution to assessments? And will you accept a range of assessment processes perhaps? Communicate with the whole supply chain to understand their levels of awareness and preparedness, including the contractors. And also do find out what others in your sector are doing. I know sometimes people are very hesitant to be the first people to adopt a new way of working. So, talk to people in your sector. I'm sure many of you will know others. What are they doing? Are they going to wait and see? Or are they moving quickly on this? If they've got a solution, what kind of solution are they using? So then you need to establish new workflows to cover like the advertising of a role, if you do that. How are you going to do assessment? How are you going to deal with disputes? What are you going to do when a contract is extended? And how are you going to evidence your compliance? Then you need to test, review and refine all those processes as you come closer to using them in anger as we get to April. Consider the impact on the supply chain of the changes to engagement methods that you're going to need to look at. So how are your contractors going to feel? Do you have an umbrella supplier? Do you have someone that can operate payroll for you? If you don't, how are you going to do your due diligence? Review your supply chain generally for compliance. Always important, but even more so as these rules come through, exposing you potentially to more liability transfer. Do use external experts to consult and assist. HMRC do expect many businesses won't have all the expertise they need in-house, so they expect you to consult with people who can help you. Do keep communicating throughout. If things go wrong with your compliance with off-payroll, it's probably often it's likely to involve an element of a lack of communication. So do keep communicating, tell people what you're doing. And of course, do not rely on another off-payroll delay, as I mentioned before. Another off-payroll delay is not impossible. It was delayed in March 2020 because HMRC weren't able to be sure that businesses were prepared enough, and with the onset of COVID, it made sense to delay it. I think it's possible to make the same kind of political argument now as we approach March and April 2021, but HMRC and the government have said so far that they're not going to delay again. So you can't, that's not a plan. Hoping for another delay is not a plan. So now onto the critical importance of knowing your supply chain. So as a result of these changes, you may find you've got people who were outside who have to use an employed solution in future. So you may use payment intermediaries more from April onwards. It sounds obvious, but it's very important to get clear. You are therefore trusting another business with the wages of contractors that you're using. So it's crucial that you can rely on them. You should be looking to use long-standing businesses with a strong UK base. And of course, goes without saying, UK tax residency for payroll. You don't want people who are paying from some other territory and therefore using that as an excuse to suggest that they can pay people without full tax being deducted. Use market intelligence where you can to make sure that you can confirm that the people you're using are legitimate and are doing what they say they do, because there's a huge reputational risk to you if you get involved in tax schemes or similar. The general rule, which is still true, is that if something looks too good to be true, it probably is. And HMRC have done a lot of work recently trying to explain to people what bad practice looks like, and so they're very unlikely to accept that you just didn't know what you were doing if you end up working with one of these people. So there's more information indicators to look for in ESM 10,032. There is what's known as a spotlight on umbrellas. So HMRC have issued that, talking about what a good umbrella looks like, what work you should do before you use one. And the revenue have also done a lot of work recently on something called mini umbrella companies, which is the MUCs on this slide. And they've done some work paired with the Advertising Standards Authority on the way that people offer umbrella services and similar services, very much because a lot of those adverts are about high take-home pay, and high take-home pay is one of the most simple indicators that something is wrong. If people are complying with tax rules, most compliant umbrella companies will be offering a very similar level of take-home pay. If one of them is standing out a mile with much higher take-home pay, then you should be avoiding that, because there's no way to pay someone legitimately in the UK without paying the same taxes that other people are paying. A quick note on rates. So as I've mentioned throughout the seminar, really, contractors, of course, are going to be, not going to be happy by the idea that they're going to have to pay more tax on the rate that they were given. And they'll be even less happy if the supply chain doesn't increase the rate at all to take account of some of these extra taxes. The critical point, though, is that the legislation intends employers' national insurance is added to the agreed rate. That's one of the kind of tenets of Chapter 10. So if you change the engagement method, a contractor might therefore assume, right, well then, are you going to find that employer's national insurance? The commercial reality is, of course, that the supply chain doesn't have extra money to find that, and so it may be able to help. It might be able to find all the money, but in many cases, it's only going to be able to find some of it, and perhaps none at all. And this is made even worse by the fact that there's often confusion about what the rate is when it's quoted. Is it an assignment rate? Is it a gross pay rate? Is it a PSC contractor rate? And what do all of those things mean? People use some of those terms interchangeably. So I would suggest you review how you communicate about rates. You might want to put in some standards about how you or your agencies advertise for workers. A good supply chain, including, of course, FCSA members, will make that very clear in their interactions with the contractor. They'll supply illustrations showing how the rate that they receive turns into net pay for the contractor. So the contractor, though, should be aware that if the engagement method changes, we're in now a new contractual arrangement, perhaps they've now become an employee of somebody. That should be very clear, because all the relevant paperwork should be done around that. But also they should understand that they're now on a new rate, or that the rate works in a different way. It's very important they're aware of that. Otherwise, they could challenge that in the future, and someone might end up with a liability for having not uplifted a rate because of something else that wasn't done at the time that should have been. Take-home pay, as I mentioned before, you're looking at, here we've got on the left, we've got our original position, Dave working outside, and on the right is where Dave might want to be if he's got to be employed. Here we've maintained the take-home pay, and as you can see, the rate needs to be increased by more than just the employer's national insurance in order to get him back to that position. Again, and we will say this to contractors honestly, you're probably going to want to be somewhere in between column 2 and column 3, and it's going to be a commercial decision for the supply chain as to whether or not how important you as the contractor are. Are there lots of other people who are prepared to do your work for a lower rate? And if there are not, then the rate will probably have to go up. How much it will have to go up is going to depend on the reality in that sector. So quickly now go through what we saw in the public sector. When these rules came in April 2017, we saw various things, and we're seeing a lot of them already as the rules approach the private sector. So supply chains weren't ready. They didn't always understand the new law. This was even worse in the public sector because this law arrived very, very rapidly. We have had another few years in the private sector to get ready for them, although many people haven't done much about getting ready. Assessments were often not done at all, or they were badly done with blanketing. So people might assess one contractor and then apply that to everybody. You're not supposed to do that. Lots of non-compliant umbrella companies were set up using loan schemes and other things. End users often left compliance to their agencies. And in the public sector version of these rules, it was even easier to do that, because the end user, it was virtually impossible for them to end up liable unless they were paying the PSC direct themselves. Rates were often not increased, especially at lower rates of pay. And so agencies in that sector often lost margin, and the margin at those lower pay rates is very small already. So there really wasn't much room for the margin to go down further. And agencies had a lot of trouble explaining to end users what the impact on take-home pay was, because it's not what they were, it wasn't part of what they did every day. So this new issue was often not discussed very well by supply chains at all. So as a result, end users often didn't know what the impact was, and if they could if it was therefore possible to kind of leave that to the agencies, they did, which wasn't the best thing for the contractors. Once the rules had come in, some end users adapted their approach. They might have used CEST at first, but then some people found that to be quite limiting, or it seemed to find a lot of people inside. So sometimes they use CEST and then move on to using something else. If they worked with their agencies and other providers, it sometimes allowed them to prosper from the disruption. So they might have been, if they were able to work with people outside who were outside, then they were able to attract the best people from other end users who perhaps had not got up to date with legislation. So the best workers moved to the people who were able to work on an outside basis. And I expect to see this again in the private sector. Agencies and end users that are prepared, they will win contractors, or the best contractors, from people who are not prepared. Commercially, some rates did move significantly from the rate before the change came in, but some did not. And they all moved at different speeds. And that's just down to the market conditions in those sectors. What I expect next to see in the private sector now, we'll have some more private sector end users will ban the use of PSCs. We saw this in banking in late 2019 and into early 2020. And then although the rules were delayed, most banks didn't go back on the decision they've made. Some private end users will try and make contractors permanent across the board, but again, a lot of the contractors don't want to work like that. So when they see the impact of this on the talent available, or the cost of increasing rates to keep those individuals happy, they'll also see the impact on the flexibility of that workforce. So the more permanent and employee-like you make contractors, the less flexible they'll be. Unfortunately, it's just common sense. We'll keep seeing more non-compliant offerings emerging, and again, they put the whole supply chain at risk. So if contractors haven't really paid the employment taxes they thought they were paying, then potentially the whole supply chain's got a problem. I think then after a few months of these new rules, we'll see some rolling back towards the current status quo. So where we've seen some banning, we'll then see people roll back on that once they see that it is possible to work with the new legislation. And having said that, though, I should make clear, I don't think that everyone that might work outside today will work outside in the future, because there are certainly some sectors and pockets of people who perhaps shouldn't have been working outside in the first place. Some people in this sector called perm tractors, people who really do look like temporary employees and they've just been working through a PSC for convenience. Those people I don't think ever will get back to working outside, because they probably should never have been. I expect to see more consultancy type arrangements, and that's where, as I described before, the intermediary supplies the whole service. The attractiveness of that is that it insulates the original end user, and also if that intermediary is therefore small, then it might not need to apply the rules itself either. So there will be some more of that, and I expect to see more of that, partly because it insulates some people from IR35 risk, but also because that model does genuinely exist already. It makes good business sense. If a recruiter or an employment business is good at providing whole projects, why shouldn't it manage those? They're taking some more risk away from the end user. They probably should, if they price their work properly, should be able to get a good return from that. So if it's also got the added benefit of helping with off-payroll, then I expect to see some more of that proliferate in certain sectors. And there'll be innovation generally leading to work, that kind of stuff, consultancy, and also statement of work use. Statements of work, just briefly to talk about those, you might see those as a possible solution to this problem. Statement of work tends to be a very deliverable based description of what the contractor is going to do. And so it gives people an added sense of security that this looks like an IR35 friendly project, so a kind of project that might be outside IR35. All I'll say about that is that's fine as long as that statement of work is a real description of how the work is going to be done. You can't take, working like an employee, write it on a document and call it a statement of work and then expect that to be outside IR35. So where the consultancy arrangement or a statement of work treatment is appropriate, yes, they will help people to comply with the rules. But if they're a fiction, they're only going to give a false sense of security. So be very careful using those, but I do expect them to be used in certain sectors and for certain types of work. So in summary, from the FCSA, from our point of view, I and no other serious person would suggest IR35, as it has been over the past 20 years, works well. We agree the legislation needs to work better. Even government departments have fallen foul of IR35 in earlier years. We do feel it's fair to say there are questions to answer around historic enforcement. We do think that a lot of contractors, in some sectors, some contractors don't comply with the legislation, and that's partly because they just don't see a volume of enforcement. and that has not helped compliance. There's also, in government generally, there's a lot of work going on around employment status. So they're thinking of codifying employment status. They accept that employment status, as I discussed earlier, is very confusing and very hard. And perhaps that's part of the problem with IR35. It's just really hard. And tax law generally it hasn't caught up yet with the way that people work, the gig economy, flexible working. But this legislation is here, and it is possible to comply with it. It's quite daunting as a prospect at the beginning. But with a serious approach and critically using good assessments, and then making sure you know who's in your supply chain, you can work with the new rules. We're working with HMRC on improved guidance and helping them educate the sector wherever we can do. You shouldn't forget that moving workers to umbrella and other solutions, it does pose a risk for supply chains because the supply chains, maybe they haven't used that solution at a large scale previously. So do your due diligence, protect your reputation, and you can work successfully with the off-payroll rules. If you do so, you'll probably get a competitive advantage, in fact, based on the talent available or the price you have to pay for that talent. And of course, do look for FCSA accreditation in your supply chain partners. That's compliance with HMRC rules that's independently assessed. So it's a great way to work out who you want to have in your supply chain. So finally, as a recap, what should you do now? Establish those new workflows for the assessment of roles, disputes, extension procedures, evidencing compliance, and of course advertising as well, I mentioned earlier. Check those, refine them, consider the impact on supply chain partners of the changes to engagement methods, review the supply chain for compliance generally, do get expert help in, don't be tempted to try and cut costs there, keep communicating with everyone, and again, do not rely on another off-payroll delay. There's various ways to stay in touch with us at FCSA. We're on LinkedIn and Twitter, as you can imagine, and there's lots of content on our website that helps talk about how these rules work and what it means to be an FCSA member, and lists the current members of FCSA, so you can check whether or not someone is a member. So at that point, I'll say thank you very much for listening, and thanks very much again to In-House Recruitment for allowing us to talk about this today. I'm very grateful for you listening, and if there's anything you need to know, please go straight to the FCSA website. Thanks very much.